everybody, Jerry here again with a little bit of everything. And in today's video, we're going to continue our series on medical billing. Today we're going to be discussing what is a payer, what is a commercial payer, what is a government payer. In today's video, I will explain to you the differences between these two and how it affects claims and things like that. Let's start with governmental payers. Governmental payers are payers such as Medicaid and Medicare. Those are insurances that are subsidized by the federal and state governments of this country. Medicaid is something that's given to people that fall below a certain poverty level. Usually the cutoff is, I believe, $800 a month. You can't make more than that. It's either $700 or $800 a month. You can't make more than that. And this insurance is widely accepted, mainly. It's covered. You're basically covered for everything. The government picks up the tab for the whole thing. On a reimbursement side of things, which is into the billing side of things, Medicaid, from what I understand, only reimburse you for 60 cents on the dollar. So something that costs the hospital $1 only gets reimbursed at 60 cents. Sucks, but it is what it is. And that's Medicaid. There really isn't nothing much more than that, but that's Medicaid. Medicaid gives you everything: dental, vision, basic health, basic medical benefits. That's really what it is. Very simple, easily obtained. The other governmental payer that we use is Medicare. Medicare is something that's a little bit more tricky, because even though that Medicare is supposed to kick in at the age of 65, certain circumstances exist where you can obtain Medicare at 10 years old, depending on certain circumstances. If you are disabled, you can be put on Medicare earlier than the age of 65. If you have any kind of transplant, like kidney transplant, you can be put on Medicare. I say kidney transplant because what I'm trying to explain is if you have end-stage renal disease, which is where your kidneys no longer work, you're on dialysis, you can get it that way. There are other ways to get Medicare, such as if you have black lung. There's a few other ways. I don't have them on me right now, but there's several different reasons. Obtaining Medicare benefits through a spouse can be done. I've seen it done. There's a whole slew of suffixes and prefixes that encompass Medicare and who the beneficiaries are. So that could be discussed later in another video. Medicare usually covers 80% of all costs, and it's a dollar for dollar match. So what that means is something that costs us $1 is $1. They don't mark up when we do billing. We don't mark up Medicare because they're not going to pay. It's cost for cost. 20% of that is covered by the patient's responsibility. Patients have a deductible, very small, maybe 100. I think the last time it was 166. I looked at it. I know it's gone up, but I don't know the exact number. It's either 166 or 187. That's the yearly deductible for Medicare. There is a monthly cost to having Medicare Part B, which is the medical benefits, the doctor visits, things like that. Part A is covered across the country. Doesn't cost any money, but there are deductibles for that as well, which is, I think, a little bit higher because it's a hospital coverage. When you're inpatient, when you're actually admitted to a hospital, that's when Part A kicks in. There is different parts of Medicare. There's Part A, Part B, Part D. D is drug coverage, prescription drug coverage. So there are, Medicare itself is a long drawn out video, but that's something for another video. This is just telling you what payers are and the differences. So those are the two governmental payers. Now, these payers can have what's called HMOs, which is a Medicaid, so what we say is, like, for Medicaid, they're managed care HMOs. So what that means is, in the state of New York, they have Health First, Affinity, Fidelis, Metro Plus. I mean, the list goes on. And these HMOs basically manage your Medicaid benefits. And the same goes for Medicare too. Some of these insurance companies have Medicare HMOs as well. And basically what these companies do, they manage the benefits for these governmental payers, trying to reduce costs, things like that. A lot of traffic today. So that's that. Okay, commercial insurance. Commercial insurance, boy oh boy, what are we gonna say? Commercial insurance is a payer that you have a contract with, and you pay a monthly premium for every month, and then in turn they provide you with health insurance and a certain type of benefit or benefits and contract limits and such and such. Such example of a commercial payer is Blue Cross Blue Shield, one of the biggest commercial payers I've seen, next to Cigna and Oxford. Now these plans vary widely. Benefits go all over the place. These are the plans that have deductibles, co-payments, co-insurance. Not to say that Medicare doesn't have co-payments, because if you get a Medicare HMO and you get it through a certain commercial carrier, you will have a copay. I've seen copays for a Medicare HMO as high as $295, $320 for a surgery visit. So I mean, which kind of makes sense. You $10,000 surgery, you're only paying $320. I get it. So with that being said, so commercial insurances, they do have the deductibles, the co-insurances, the co-payments, and all that stuff. But generally, commercial insurances reimburse at a higher rate. So let's say something that costs me $1, I can get $1.40 for. So now I'm making money on my cost, right? Because that's the name of the game: make money while providing excellent health care. I know that's the joke in this country. You want to profitize something that shouldn't be profitized. It should be, everybody should get the care they deserve, while the hospitals should be able to maintain solvency. That's a whole other story. So you have that. And like I said, there's a lot of different payers out there: commercial payers, governmental payers. Well, no, the governmental payers is Medicare and Medicaid, that's it. But there's various HMOs, and that's something that, we could touch upon at a later date. But I think I got the point across about the different types of payers. There is such a thing as self-pay, and there's, in my hospital at least, there's two different meanings to that. You have patients who are unable to obtain Medicaid and therefore are put on financial aid, which is considered self-pay. And then you have those patients who just have the kind of money thrown around where they could pay $30,000 for a surgery, and those are true self-pay, which is why it's called true self-pay. So that's something. But yeah, I don't think there's much more I could do to differentiate what payers are, and I think I've explained it, well enough that you understand it. If you have any comments, questions, please put them in the comment section below. And as always, thank you for watching. Like, comment, subscribe.